Hey everyone, and welcome back. Now today I wanted to go over some recent happenings in the market that I think are, pretty concerning, but also I would say fairly predicted. And so I want to keep you guys safe when you're navigating the wild and crazy world of the crypto markets. So let's go on ahead and dive right in. So starting out, we are going to come back to the trusty crypto fear and greed index. And here we are back in fear. Hello, darkness, my old friend. It's rough out there, but I think based on the recent price movement, this isn't all too surprising to see, or at least I think it shouldn't be all too surprising to see. So with the recent drop in price, this is obviously fueling some fear within the wider market, and so I think this is fine. If we bring this in a little bit closer, we can see we did pop up into neutral for a couple of days, but we have come back down into fear. Who knows how long this is going to last. We might see this for several more weeks. We might see it for several more months. Historically, August and September have been relatively bad months for crypto, just historically speaking. And then October, November, and December are usually pretty good months, again, on average historically. So, this is something where if we were to see this continue for the next month, historically, that would kind of play out. However, we really don't know, what we're going to see long term. And one thing I wanted to do is I did want to kind of send a PSA out to everybody here. I happened upon this on Twitter, literally as the market was crashing. And I don't want to show this person because I'm not trying to slander anybody, because I think ultimately, as I mentioned a million times within our on the channel, nobody knows where the market is going, right? And so this person essentially released a tweet saying, oh, I'm super bullish on the price of Bitcoin, and things are looking really good. We're settling on a support here, and now we're gonna just bounce right off and go to the moon. And then, as you are all aware, we know what happened. Boom. So that just goes to show you nobody has any idea what's going on. As we talked about it on the channel yesterday, this is something that I would have said is within the realm of possibilities. I never pretend to know what's going to happen, because obviously nobody does, and anybody that's telling you they do is lying. But ultimately, I did say that I think this was within the range of possibilities. And from a pure risk reward perspective, don't be chasing pumps. That's just what you just don't do that, right? And so sometimes you just have to let the pumps run, and then when they come back, you can get in, at a more advantageous point. Maybe it's not even the price coming back to where it previously was, but it was just more, it's now sitting in a market structure that's more advantageous. So anyway, moving on to the Bitcoin chart, I wanted to show you a couple of things that we talked about on the channel yesterday, and then kind of how things played out. So as I was mentioning, yesterday, the pump actually I think was sitting like right up here. We could see the candle closed kind of a little further down. But one of the things I was saying is, as this pump was going, was, obviously don't chase pumps. And when you're sitting in a position like this, from like a risk reward perspective, it's really not advantageous, right? Because let's just say this were to continue to push into the upper channel, like, great, you win. But if something like this happens, you've lost a lot more than you would have gained, right? And this was not really sitting in a structure that looked that appealing, really, to take a trade on anyway. So ultimately, you need to be very careful when you're trading like this, and sometimes doing nothing is better than doing something. With this type of structure, I probably would have gone short, not necessarily based on structure, but because we saw all of the liquidations that were stacking up to the long side, right? So essentially there was more money to be made in the market for things to come down like they did. So that leads us to our next point, which is how many people have gotten wrecked over the past 12 hours particularly, but then also, the 24 hours. We've seen, $230 million wiped out in the past 12 hours, and then 320 million in the past 24. And as we can see on both, overwhelming majority is in longs. I don't think this is super surprising, just based on the liquidation levels that we looked at yesterday. I think this kind of makes sense. Obviously, most of this was within Bitcoin and ETH, but then, there are some others that happened as well. But the majority, was within Bitcoin and ETH, which makes sense. I mean, those are the two big ones that people trade. They're the most widely available perps and most liquid markets overall. So Moving on to the next, I think this is now a good time to look at the exchange liquidation map, because this has been so good to us, at least so far, that I think it does warrant taking another look at. Now, as we can very clearly see, it massively favors short liquidations over long liquidations, and that's because long liquidations have largely been wrecked, over the past 24 hours or so. So, what this means to me is, again, if I were to be looking for a move in a certain direction, it would be to the upside, because, I tend to have this bias that the market likes to wreck as many liquidations as possible. As we can see on the Bitcoin chart, I had to reload it because it was showing Bitcoin, but it was showing Ethereum prices. So I'm not exactly sure what was going on, but we can see here that just over $60,000, we do hit $1 billion in liquidations on shorts. So this is something that I think, in my opinion, makes sense that we would see some moves up to the upside. But again, nobody knows what direction the market is going. But to me, when something is this biased, I think it's fairly clear. Obviously you need to make your own decisions. This is not financial advice, but ultimately, this seems to make sense that the upside would be where we go. Now, if we move on to the liquidation heat map, we can see something similar, where if we're going up to 65, 68, 70, obviously there's a lot of liquidations up at this higher level. It's not looking like it's showing any of these lower liquidations. I guess it is. It's showing some of these lower walls. But ultimately, the big money is kind of up above, these structural highs, which we have not seen anything break yet. But I think it's possible for us to see that maybe within the next, month or two. So that's all I had today for going over the market update. Hopefully this was helpful to you, and hopefully you're starting to see kind of some of the things that we're seeing in the market, and it's helping you not be a statistic on the 24-hour wrecked chart. That's my main goal, is to keep all of you guys safe, because ultimately, obviously on the channel, I do have this bias that the market likes to move in the direction that liquidates the most people. I don't know if that's a controversial take or not. To me, it does not seem to be a controversial take when we have all of these exchanges who are wanting us to trade, and they make money off of us being liquidated. It seems like there's a little bit of a conflict of interest there. So having these moves that may not be completely genuine, I do think make a lot of sense. So overall, please do leave me a like and subscribe if you found the information helpful, and hopefully if I'm helping you stay out of trouble. Also, please do comment. I do like reading all of the comments, and I do read and respond to all of my comments. So if you have any information or things that you want to share, or questions or anything like that, I'd be happy to answer those. Thank you for tuning in, and we'll see you in the next video.